Hello everyone. So my name is Deepak Chouhan and I'll be taking this subject corporate accounting and auditing for you guys. Okay. So basically I'm in the profession of teaching for about close to 9 years. Okay. So I have been teaching subjects like accounting, financial management and income tax. Okay. So when it comes to this particular subject, corporate accounting and auditing, what is relevant for you guys is to have a proper knowledge with respect to the accounting related to companies. So that is why it is called as corporate accounting. Okay, so in this particular subject you will mainly be learning the accounting pertaining to company, whether it is with respect to issue of shares and debentures, whether it is with respect to how exactly do the companies prepare the financial statement. At your foundation level you guys would have learned about the information relating to proprietorship and partnership, right? Correct. So how exactly things work out in proprietorship, how exactly do the proprietor prepare the financial statement, and when it comes to partnership you guys would have learned about admission, retirement, death, okay, all these stuff. But here exclusively or mainly you guys will be learning the concept pertaining to companies. So basically let me make you guys go through your syllabus first. After that we'll just be proceeding with each and every chapter. Okay, so before we start up with this particular discussion, I'll be requiring few things from your end. Okay, so the topmost thing is just try to go through the things whatever we discuss in that particular class on that particular day itself. Okay, so that the things remain in your mind. Okay, so if at all I'm completing few stuff in a particular day, make sure that you guys go through those stuff. Clear? So I'll not be covering like too much of things in a single day. Okay, so whatever has been covered in a single day, make sure that you guys also simultaneously cover up. Now what would be the advantage of this? By the time we complete the syllabus, your first time preparation would be done. Clear? And when it comes to referring the material, just stick on to this particular study material which is issued by your institute. Don't refer any other material for this particular subject. So when it comes to corporate accounting and auditing, just refer to the study material which is issued by your institute. That would be more than sufficient. And each and every single illustration whatever is available in your material, we will be solving it in the class. Okay, so don't worry, each and every illustration with detailed workings, okay, will be solved in the class. The notes will be shared to you guys. Okay, so whatever illustration we prepare in the class, the notes will be shared to you guys. So the least thing which I expect from you guys is just try to go through each and everything whatever has been covered in that particular class. Hope you guys understood this. Clear? Okay, so on that note, let us just go through this particular syllabus. So this particular subject has got two parts. Okay, so one is corporate accounting, another thing is auditing. Look at this. So this particular subject comprises of two parts or two sections, you guys can call it as. Okay, so corporate accounting which carry 50% of weightage of marks, exactly equal weightage. Okay, so again auditing 50% of weightage. When it comes to corporate accounting, we have got 5 chapters. Okay, so although it seems like very less chapters, but believe me, like in detail when you guys go through it, it is too much of information. Okay, so when it comes to accounting for shares and debentures, although it is one chapter, will be having 3 units in it. Clear? So issue of shares and debentures, okay, forfeiture of shares and debenture, reissue, a lot of stuff, bonus issue, right issue, everything is being covered in a single chapter. So the first chapter would be accounting for shares and debenture. If you see the weightage of marks, it would be 10%. So out of your 100 marks paper, 10 marks, okay, would be appearing from this particular chapter. The second thing is preparation of statement of P&L account and balance sheet. This is nothing but preparation of financial statement for the companies, which is schedule 3. Here, so at your foundation level, you guys would have learned about preparation of financial statement of proprietorship, right? So here you will be learning about how exactly do the companies prepare the financial statement. So all the companies will be following the Companies Act 2013. So the preparation of financial statement, or in what format are we supposed to prepare the financial statement, that has been prescribed in this schedule 3. So we'll practically be learning about how exactly are we supposed to prepare the financial statement pertaining to company. Clear? And then when it comes to third chapter, it would be cash flow statement. The fourth chapter would be accounting for banking, electricity and insurance company. All the companies will be preparing the financial statement as per schedule 3 of Companies Act. Although these companies, banking company, insurance company and electricity company, although they are company, they will not be following schedule 3. The reason is very simple. They have their own guiding law. Clear? So for these particular companies, banking companies, electricity company and insurance company, they have got their own law. Okay, so therefore they will be preparing the financial statement as per the format which has been prescribed in their respective law. Clear? So for banking company, the regulatory body would be Banking Regulation Act 1949. Okay, so same way for insurance company, we have got IRDA Act. Same way for electricity company, we have got their own law. Clear? So these companies will not be preparing the financial statement as per the schedule number 3. No, they will not be preparing as per schedule 3. So they will be preparing the financial statement as per the format which has been prescribed in their respective law. Hope you guys understood this. Clear? So that's the reason we have a separate chapter, that is accounting for banking company, insurance company and electricity company. Then the last chapter would be with respect to accounting standards. So what are these accounting standards? See, whenever we are doing the accounting process or whenever we are preparing the financial statement, it's not that we'll be preparing the financial statement as per our will and wish. So there are certain accounting concepts, certain accounting principles, okay, certain accounting standards what we need to follow. Clear? For each of the item relating to financial statement, we'll be having like separate accounting standard. So for fixed asset, property, plant and equipment, we have got accounting standard 10. Clear? So for revenue recognition, we have got separate accounting standard. Accounting for intangibles, okay, provisions, we have got separate accounting standard. So whenever we are preparing the financial statement for companies, we need to abide by these accounting standards also. So those accounting standards will be dealt in detail when it comes to chapter 5. If you just have a look at the weightage of the marks, each chapter comprises of equal weightage. Do you find this? 10% for the first chapter, second chapter, third, fourth and fifth. Okay, so each chapter has got equal weightage. So don't take the risk of ignoring or skipping a particular chapter. Okay, so we'll be covering each and every chapter in detail. Make sure that you guys are also thorough with each and every chapter. Hope you guys understood this. Okay, so this is pertaining to corporate accounting part. Now what about the second part of this particular subject? The second part would be with respect to auditing. Clear? So what is an audit basically? You guys would have heard about accounting, right? But what is this audit? Audit is nothing but independent examination of books of accounts. Okay, so independent examination of books of accounts. So the auditor will just be giving an opinion whether the books of accounts show a true and fair view. Okay, now when is that the books of accounts will be showing true and fair view? Only when it is free from errors and fraud. Okay, so in simple terms, audit is nothing but examination of books of accounts in order to determine whether the books of accounts are free from errors and fraud. Okay, let me just give you a simple example. So when it comes to, you guys would be aware about the meaning of these terms, right? Proprietorship, partnership and company. Correct? So what is proprietorship? So in case of proprietorship, there will be a single owner. He'll be contributing the money. He'll be taking active part in the affairs of the business or management of the business. Whatever is the profit or loss will be taken care by him. Okay, or will be enjoyed by him. In case of partnership, what would happen? Two or more people will be coming together in order to share the profits of the business carried on by all or any of them acting for all. So basically two or more people coming together. So both these people are contributing some funds or capital. They'll be taking active part in the management of affairs. Whatever is the profit or loss at the end of the year will be distributed amongst these partners in their respective profit sharing ratio. Clear? So proprietor being owner, he is actively taking part in the business. Okay, so he'll be knowing what exactly is happening in the business. Partners being the owner, they are actively taking part in the management of affairs of the business. But when it comes to company, okay, will this happen? Who will be the owners when it comes to company? Don't you think it would be the shareholders? Shareholders will be the owners of the company, but do they take active part in the management of affairs? No, right? So they don't take active part in the management of affairs of the company. So that's the reason what they do is they'll be appointing auditors. Okay, so they cannot rely upon the financial statement which is prepared by the board of directors. Always remember, when it comes to preparation of financial statement, it is not the responsibility of auditor. It is the responsibility of management of board of directors. Okay, so either the management or board of directors, they'll be preparing the financial statement. So what would be the role or responsibility of auditor? He'll be examining these financial statements and he'll be giving an opinion whether these financial statements actually show a true and fair view or not. Is this clear? So the auditor will be independently examining the books of accounts and the financial statement, and he'll be giving an opinion that these books of accounts are free from errors and fraud. Is this clear? Now look at this. It would be like this. Let's say there's a company called as ABC Limited. Clear? So there's a company called as ABC Limited. Now, who will be the owner in this case? Owners shall be the shareholders. Shareholders shall be the owners. Okay, so what about the management? Management will be taken care by board of directors. Who will be preparing the financial statement? It would be the responsibility of management or board of directors to prepare the financial statement. So can these shareholders rely upon this particular financial statement prepared by board of directors? No, right? So there is possibility that these board of directors would have misstated the financial statement, or they would have mispresented this particular financial statement. Okay, so that's the reason what these people, shareholders, do is they'll be appointing auditors. So what these auditors does is they'll be examining these financial statement. Okay, so once they examine this financial statement, they'll be preparing a report called as audit report. Clear? So this audit report, they'll be giving an opinion whether the financial statement are actually showing a true and fair view or not. Clear? So just because the shareholders cannot directly rely upon the financial statement prepared by the board of directors, they appoint auditors. The auditors will be examining the financial statement and they'll be giving an opinion, okay, whether the financial statement prepared by these board of directors, do they actually show a true and fair view or not? Are they free from errors and fraud? Clear? So only then the shareholders can rely upon the financial statement. Only if it is audited, the shareholders can rely upon the financial statement. The main reason is they are not taking active part in the management of affairs, right? So they have to know, being the owner, they have to know what exactly is happening in the business organization. Okay, so that's the reason this audit process is important. Clear about the meaning of this particular term audit at least? Clear? So when it comes to auditing, what and all do we learn? We'll be learning the basic concepts of auditing. Okay, so the weightage of this particular chapter, as usual, it would be 10%. So provision relating to audit under Companies Act. This is nothing but company audit. Now, if you just have a look at the weightage of this particular chapter alone, it is like 30% of weightage. It is almost like 30 marks. Okay, so 30 marks will be coming from this particular chapter. So this is the most important chapter. Clear? So audit related to company, the company audit, this particular chapter itself comprises of close to 30% of weightage, that is close to 30 marks. Okay, so then the last thing would be audit of different types of undertaking. So here we'll be learning how exactly the audit of cooperative society happens, how exactly the audit of NPO, non-profit organization, happens, what exactly would be the audit of NBFCs, banking companies, insurance company. All these things we'll be learning in this particular chapter. The weightage of each and every chapter, if you guys see, it is 10%, except for this particular chapter, that is company audit. Okay, so company audit alone comprises of 30% of weightage, okay, which is almost 30 marks. Is this clear? Hope it is clear about this particular subject. Okay, so subject for that matter, it is like this: corporate accounting and auditing. Clear? So this is your subject. So this will be divided into two parts. One would be corporate accounting. Okay, so another thing would be your auditing. Clear? So when it comes to corporate accounting, totally we have got like 5 chapters. Okay, so let me just give you a brief introduction about these particular chapters. So first thing is with respect to what? Okay, so accounting for shares and debentures. Clear? So this carries 10% of your total marks. So that is almost 10 marks. Okay, so out of 100, 10% weightage is as good as 10 marks. In this particular chapter, the things what we'll be learning would be introduction for company. What exactly is the meaning of company? What are the features of company? Okay, so what are the different types of shares? Okay, all these things when it comes to first unit. Second unit will be learning mainly about what? Issue. Okay, so issue of shares and debentures. So basically the journal entry or accounting pertaining to issue of shares. Okay, so what exactly will be the accounting treatment when the company is issuing the shares, when the shares are issued at premium? Okay, so if the shares are issued at par. Clear? So same way in case of forfeiture, what will happen? Okay, so same way in case of reissue of the shares, what would be the accounting treatment? We have something called as right issue. Okay, we have something called as bonus issue. We have something called as buyback. All these things will be dealt in this particular second unit. Okay, and when it comes to third unit, we'll be mainly talking only about the preference shares and debentures. Okay, so issue and forfeiture, okay, or redemption of preference shares and debentures. Okay, so what exactly will be the accounting treatment in case of issue of preference shares and debentures? Same way with respect to redemption of preference shares and debentures, what exactly will be the accounting treatment? So this is what you'll be learning in this third unit. So all these 3 units put together, the weightage would be 10%, that is 10 marks. Then the second chapter, if you see, this is with respect to financial statement of companies. Okay, that is P&L account and balance sheet. So as per the schedule 3. So what is the schedule 3? Always remember this. Okay, so schedule 3 is nothing but the format in which the companies are supposed to prepare the financial statement. Now each and every company will be preparing the financial statement as per a particular format or in a prescribed format. So where is it prescribed? It has been prescribed in the schedule 3 of Companies Act. Is this clear? Now what's the reason behind this? When each and every company are preparing the financial statement in the same format, it would be very helpful, or it would be easy for the users to compare the financial statement. If I'm holding the financial statement of ABC Limited and XYZ Limited, both are companies, right? So both would have prepared the financial statement in the same format. So it would be easy for me to compare these two financial statements. Or if I'm holding the financial statement of a particular company for 2 different years, for both of these years, the company would have prepared the financial statement in the same format. So it would be easy for me to compare the financial statement and analyze the information in a proper way. Is this clear? So that is your second chapter. So in the second chapter, we'll be learning about how exactly do the company prepare the financial statement. Okay. So then when it comes to your third chapter, okay, so when it comes to your third chapter, this is cash flow statement. The weightage again same 10%. Okay, so cash flow statement, the weightage would be the same 10%. So what is cash flow statement? So cash flow statement is basically a particular statement which will give you the information about inflow of money and outflow of money. Look at the name, cash flow statement. How is the cash flowing? How much exactly is the inflow and how much exactly is the outflow of cash? So here we have got 2 methods of preparing the cash flow statement. Don't worry as of now. So once we look upon this particular chapter, we'll be dealing in detail, okay, or we'll be discussing in detail, and we'll be learning how to prepare this particular cash flow statement. So cash flow statement is also a part of financial statement. Okay, so when it comes to financial statement, even cash flow statement would be a component of financial statement. In the second chapter, you will be learning only about preparation of P&L account and balance sheet. Look at the chapter name of 2. Preparation of statement of P&L account and balance sheet, okay, as per schedule 3. Okay, so basically when it comes to schedule 3, it would be like this. Schedule 3 is with respect to what? This is with respect to preparation of financial statement. According to this, financial statement will be including the statement of P&L account, or you can call it as profit and loss account. The next thing would be balance sheet. Okay, so then the third thing, if you see, it would be cash flow statement. Okay, so cash flow statement, and then the last thing would be changes in equity. Okay, so statement of changes in equity. Clear? So these are the components of financial statement. When it comes to chapter number 2, you guys will be learning only about preparation of P&L account and balance sheet. Okay, so always remember these terms. Why do we prepare this P&L account? You guys would have heard these particular terms, right? So P&L account, balance sheet. Okay, so why do we prepare this P&L account, and why exactly do we prepare this balance sheet? What's the objective? Yes, so P&L account is mainly prepared in order to ascertain something called as financial result, or you can call it as financial performance. Why do we prepare the balance sheet? Balance sheet is mainly prepared in order to ascertain the financial position. Clear? So each statement, whatever we prepare, there will be some purpose or objective. The main purpose or objective behind preparing this P&L account is to ascertain the financial result or financial performance. What is this financial result or performance? To determine whether the business entity is actually making profit or whether it is incurring loss. Okay, so if I want to calculate, okay, how much exactly is the profit which is made by the business, I'll be preparing this particular statement, that is P&L account. See, it's not only about just carrying on the business or doing the business. At the end of each and every year, the person who is doing the business should be knowing where exactly is he standing. Is he making profit? Is he incurring loss? He should be knowing it, right? It's not that just keep on doing the business. No. Okay, so along with carrying on the business, we should also be determining where exactly are we standing. Okay, so are we making profit this year or are we incurring loss? If there is loss, what exactly is the necessary steps which we can take in order to convert this loss into profit? All these decisions will become very crucial. Okay, so the statement what we prepare in order to determine the financial result would be this profit and loss account. Okay, and when it comes to financial position, okay, the statement which we prepare would be balance sheet. Always be clear with these two terms. Financial performance and financial position are not one and the same. Okay, so majority of the student would be interpreting these two terms in the same manner. No. Okay, so both these terms are different. Financial result of performance is what? It is with respect to determining whether the business entity is making profit or whether it is incurring loss. Okay, so that is financial result. What is result? Basically to determine whether the business is making profit or loss. That is financial result. When it comes to financial position, okay, so what is financial position? It is just to determine what exactly is the value of assets which is owned by the business organization and what exactly is the value of liabilities or obligation on a particular date. That is what is financial position. So if I say my position, okay, so I'm talking about what exactly is the quantum of asset which I own and what exactly is the value of liabilities or obligation which I owe. That would be my financial position. If you guys would have ever observed the heading of this P&L account, what would be the heading of P&L account? P&L account would be like this: profit and loss account for the year ending, okay, or for the year ended so and so. So this P&L account will give me information about the entire year. So suppose in my trading and P&L account, if I just show a sales of 40 lakh rupees, this is not the sales which is happening on 31st March. No, this is the total sales which happened during the entire year. Okay, so when I say P&L account for the year ended 31st March 2023, okay, so it means for the financial year 22-23, this was the total value of sales. Is this clear? But what about the heading of balance sheet? The heading of balance sheet would be like this: balance sheet as on so and so date. Clear? Balance sheet as on 31st March 2023. There if I am telling, okay, so bank balance 2,50,000 rupees, it means this is the value of fund which is available in my bank account on that particular date, that is on 31st March 2023. Clear? So balance sheet is always prepared in order to ascertain the financial position on a particular date, on a specific date. So that is why the heading will always be like this: balance sheet as on so and so date. So whatever are the values of assets and liabilities which is shown in the balance sheet, that would be the values on the date on which we are preparing this balance sheet. Okay, so balance sheet will never give you the picture about the whole year. It will just give you the values of assets and the liabilities on the closure of financial year, that is on 31st March. Is this clear? So never get confused between these two terms. Financial result is just to determine whether the business is making profit or loss. Financial position is with respect to determining what exactly is the value of assets which is owned by the business organization and what exactly is the value of liabilities. To determine financial result, I'll be preparing P&L account. To determine this particular financial position, we'll be preparing this balance sheet. As simple as that. Is this clear? And look at this. This is also a component of your financial statement itself, cash flow statement. Okay, so this is prepared in order to determine the solvency position. So what is solvency position, or who is an insolvent? Basically a person who is not having sufficient asset in order to repay his liability. Such person will be treated as insolvent. If I don't have sufficient cash or funds in order to repay my liabilities, I would be treated as insolvent. Clear? So this particular cash flow statement will mainly give us information about inflow of funds and outflow of funds. How much cash is coming into the business, how much cash is going out of the business, and at the end of year, how much cash is actually left over. Clear? So there are certain types of companies who will not be preparing this cash flow statement, will not be forming a part of their financial statement. So we have few companies like one-person company, small company and dormant company. These companies, it would be sufficient if they are preparing this P&L account and balance sheet. They need not prepare this cash flow statement. Whereas other than the small company, dormant company and one-person company, they'll have to mandatorily be preparing this cash flow statement also. Okay, so those companies will have to mandatorily prepare this cash flow statement also. Is this clear? Hope you guys understood this. Okay, so statement of changes in equity. What is the statement of changes in equity? Now, when it comes to equity shareholders, they'll have the freedom to transfer the shares. Okay, so except in case of private limited company, all other type of companies, the shareholders will be having the freedom to transfer the shares. Okay, if I'm the shareholder of a particular company, I can easily transfer the shares to somebody else. Okay, so that much of right I've got. But in case of private limited company, we cannot do. So whenever there is some changes which is happening in the capital structure of the company, such changes will be recorded in this particular statement called as statement of changes in equity. Okay, you need not worry about this. Clear? Hope you guys understood. Clear about cash flow statement? At least got a brief introduction about this particular chapter, cash flow statement. We have got two methods like direct method, indirect method. Okay, so we'll be segregating. Okay, so cash flow from operating activity, cash flow from financing activity, cash flow from investing activity. All these things will be learned in details once we start with this particular chapter. Okay, so that is chapter number 3 for you guys. So when it comes to chapter number 4, okay, so let's talk about chapter number 4. So in the 4th chapter, you will be learning about preparation of financial statement or accounting for banking companies, insurance company and electricity company. Clear? So weightage of this particular chapter also would be 10 marks. So accounting for banking company, insurance company and electricity company. Remember, I told you all the companies will be preparing the financial statement as per the schedule number 3. Okay, so except banking company, electricity company and insurance company. Now, although these are companies, they'll be having their own regulatory body. So as I already told you, for banking company, we have got their own regulatory body, that is Banking Regulation Act 1949. Same way with respect to insurance and electricity company. For insurance, we have got IRD Act. For electricity, again, we have got their own act. Okay. So these particular companies will be preparing the financial statement as per the format which has been prescribed in their respective law. Okay. So these companies will not be following the schedule 3. Okay, so that's why we have got a separate chapter wherein we'll be learning how exactly do the banking company, insurance company and electricity company actually prepare the financial statement. Clear? The last chapter would be with respect to accounting standards. The weightage again would be the same 10%. Is this clear? Hope you guys understood this. Okay, so these are the chapters, or these are the brief introduction with respect to each and every chapter pertaining to corporate accounting part. So when it comes to auditing part, so here we have got basic introduction pertaining to auditing. Okay, so weightage again 10%. Clear? So when it comes to second chapter, the most crucial or important chapter. Okay, so this is with respect to company audit or audit as per Companies Act. The weightage of this chapter, it is not 10, it is 30%. Okay, so weightage of this particular chapter alone would be like 30%. Okay, so most important chapter, 30% of weightage. The last thing, okay, would be with respect to what? Audit of other undertakings. Clear? So here we'll be learning what exactly are the provision with respect to audit under cooperative law, or audit for cooperative society, audit for insurance company, audit for NBFC, audit for banking companies. So for different other entities, okay, or for different other undertakings, what exactly will be the provisions relating to audit? Okay, so weightage of this particular chapter also would be 10%. Each and every chapter, if you see, it is same weightage, 10%, except for this particular chapter. Okay, so which alone carries 30% of the weightage. Clear? So the sequence in which we will be discussing these particular chapters would be the same. Okay, so we'll be going in the same sequence or same order. Okay, so first we'll be touching upon this particular accounting for shares and debentures, then financial statement of companies. Each and every chapter will be going in the same sequence. Okay, like how it is in your study material. Only thing which I require from you guys is just try to cover up whatever we cover in this particular day. Make sure that you take some amount of time and go through those stuff. Clear? Hope you guys understood this. Guys, please follow this. Okay, so by the time we complete the syllabus, you guys should also be thorough with respect to those particular chapters. Okay, so this is possible only if you guys try to cover whatever we discuss in the class on that particular day itself. I know you guys will be busy. Okay, so if at all you're touching upon, now let's say 1 week we have already covered the chapters. Okay, so you plan that entire week I'll be covering in a single day. Believe me, it won't be possible. Clear? On that particular day itself, just take some effort. Okay, so it will not be taking too much of time also. 1 hour or maximum 2 hours in a day. Okay, so that would be more than sufficient for you guys to go through it. Okay, so pay complete attention in the class, each and every illustration. Okay, even the theoretical part, whatever is important, I'll be giving you, or I'll be providing the notes. Okay, if you just go through that particular notes, more than sufficient. Okay, and when it comes to illustration, so each and every illustration will be solved with detailed working notes. Okay, probably those working notes will not be available in your note, in your study material also. In your study material directly they would have given the value, but we'll be showing how exactly did we arrive in that particular or arrive at that particular value. Everything will be available in our notes. If you just go through it, more than sufficient. I hope you guys can give that to me. Okay, so just give these two things. Okay, complete attention in the class and try to cover up all the stuff whatever we discuss in the class on that particular day itself. Okay, very much scoring subject, guys. Okay, believe me, this particular subject you guys can score very well, which will be helpful for your aggregate in overall marks. Okay, so fine, on that note, let's just start with this particular first chapter, that is accounting for shares and debentures. Okay, so let's start up with this particular chapter, accounting for shares and debentures. Look at this. As I already told you, this particular unit will be having 3 chapters or 3 subunits, or this chapter will be having 3 units. See, look at the first unit. Here we'll be learning about issue of shares. Okay, forfeiture of shares. Okay, right issue of shares. Again, after forfeiture, we'll also be learning something about reissue of shares. Clear? So then we have got bonus issue, sweat equity shares, employee stock option plan and employee stock purchase plan, buyback of shares. All these things, okay, will be discussed in the first unit. Okay, issue of shares, forfeiture of shares, reissue of shares, right issue, bonus issue, sweat equity, okay, employee stock option plan, employee stock purchase plan, buyback of shares. Okay, all these stuff will be discussed in this first chapter or first unit of the first chapter. Second unit will be talking about redemption of preference shares, issue and redemption of debentures. Okay, so redemption of preference shares and then issue and redemption of debentures. So basically we'll be talking about issue of preference shares and debentures, redemption of preference shares and debentures. So what is redemption? Redemption is as good as repayment. Okay, so don't worry about all these terms. I'm just telling what exactly does each and every unit comprise of. Okay, all these things will be discussed in detail. The third unit would be with respect to underwriting of shares and securities. Okay, so this would be the, or these would be the 3 units pertaining to first chapter. Okay, so when it comes to second chapter, already I told you, here we'll be learning about how we prepare P&L account, balance sheet. Okay, and then the third chapter would be with respect to cash flow statement, no further units. Okay, just a single chapter, cash flow statement. Here, if you know how to prepare the cash flow statement, more than sufficient. Okay, so again, when it comes to accounting for banking, electricity and insurance company, again single chapter. Okay, so lastly we'll be learning accounting standards. Okay, so conceptual framework and specified Indian accounting standard with comparative provision with AS. So we'll be comparing Indian accounting standard with the earlier accounting standards. Okay, so let's start with this first chapter relating to your corporate accounting, that is accounting for shares and debentures. Okay, this would be your first chapter, accounting for shares and debentures. Okay, so let's start up with this first unit. Okay, so let's talk about this particular introduction. So here what they would have basically told us, they would have given you the meaning of the term company, they would have given you the features of companies. You will be learning about different types of companies. Okay, so all these things is what you'll be learning. Okay, pretty much simple stuff. So anything whatever is important we'll be preparing in our notes. Don't worry about that. Okay, so let's talk about this. So look at this. A company is described as a voluntary association of persons who have come together for carrying on some business and sharing the profits with capital dividend in numerous transferable shares. Okay, so what is the objective of the company? So company is basically a voluntary association of persons, okay, who come together in order to carry on the business and share the profits of this particular business. Okay, so let's talk about the main definition of this particular term. Okay, so before that, it is an artificial person. Always remember, company is an artificial person. Just a second. Okay, so it is an artificial person created by law. Just a second. Always remember, company is an artificial company. So when it or artificial person, when it comes to proprietorship and partnership, the registration is not mandate. Okay, but when it comes to company, a company can come into existence only if it is registered or incorporated. Once it is registered, it would be treated as a separate person in the eyes of law. So that is why company is always treated as an artificial person in the eyes of law. Clear? So company is an artificial person created by law. Hope you guys understood this. Okay, so company can come into existence only if it is registered or incorporated. Once it is registered, it would be treated as an artificial person. If at all you want to put a case on company, you can treat it as a separate person and put a case on company. Or if the company wants to put a case on somebody, it is still possible. Why? Because in the eyes of law, it is treated as a separate person. Okay, if the company wants to purchase any asset in its own name, it is possible. Company can always purchase an asset in its own name. Hope you guys understood this. How is it possible? This is possible because once it is registered, it is treated as if it is a artificial person in the eyes of law. It will be having its own identity. Okay, so let's look into the definition of this particular term. Section 2 clause 20 of Companies Act 2013, hereafter referred to Act, defines a company as company formed and registered under this act or an existing company. So any company which is registered or formed under this particular act, that is Companies Act 2013, or existing company. See, before this Companies Act 2013, we had something called as Companies Act 1956. Okay, so if at all a particular company has been registered under the old Companies Act 1956, even that would be considered as company only. And always remember, whenever it is with respect to section 2, you need to read it in this way: section 2 clause 20. It is not subsection 20. Okay, always remember, what is section 2? Any law or any act for that matter. Okay, so it would be having few basic sections. Okay, any law or any act for that matter. Section 1, what would be section 1? Yes, this would be with respect to short title. Just a second. Very sorry for my gorgeous handwriting. Okay, so first thing would be section 1, this would be with respect to short title. Okay, so short title, commencement and applicability. This would be section 1. Any law for that matter, section 1 will be talking about the short title of the law, the commencement of this particular act, and for what area will this law be applicable. Okay, so you guys would have heard this, right? So this law will be called as Companies Act 2013. This will be commenced from 1st of so and so date. Okay, and this will be applicable for whole of India. Okay, including Jammu and Kashmir or excluding Jammu and Kashmir. You guys would have heard these things, right? Correct. So that is section 1. Section 1 mainly talks about what? Short title, commencement and applicability. So when it comes to section 2, any act or any law for that matter, this would be definition section. Okay, all the important terms and terminologies or all the important stuff will be discussed or will be defined over here. When it comes to section 2, all the terminologies, okay, so which are used in this particular law will be defined over here. Clear? So this is as good as definition section. You guys would have just gone through this particular dictionary, right? You guys would have referred the dictionary, right? So don't you think the meaning of different terms will be available in an alphabetical order? Same way, even over here, the various terminologies will be available in alphabetical order. Clear? So when it comes to section 2, we should always read like this. If it is section 220, don't read it as section and subsection. Read it as section and clause. Okay, section 2 clause 20 it is. I am telling that only with respect to section 2, okay, not any other section. Any other section for that matter, it would be like this: section, subsection, clause and subclause. Only with respect to section 2, read it in this way: section and clause. But when it comes to other things, you guys will be reading like this: section, subsection, clause and subclause. Is this clear? Hope you guys understood. Okay, so wherever you come across section 2, always read it in this manner: section 2, clause 20. Other section, don't read it in this manner. Read it like this: section, subsection, clause and subclause. Hope you guys understood this. Okay, so this is section 2, clause 20. This defines the term company. What is a company? Company is an artificial person or company. Okay, so a company is defined as a company formed and registered under this act or any other company. Okay, so any company which is registered or incorporated under this law or any other existing company. Simple definition. So what is an existing company? An existing company means company formed and registered under any of the former Companies Act. Remember, I told you before this Companies Act 2013, we had Companies Act 1956. If at all a company is formed or incorporated or registered under Companies Act 1956, even that would be considered as company. Is this clear? Hope you guys understood this. Okay, so thus a company is an abstract person, invisible, intangible and existing only in the contemplation of the law. Okay, it can hold, purchase, sell both movable and immovable property or assets. Okay, so remember I told you, company once it is registered, it will be having its own existence in the eyes of law. If at all it wants to purchase any asset, whether it is movable or immovable, it can still do. Okay, so all these things not much relevant from examination perspective. Okay, so look at this. What and all stuff can a company do? It can hold, purchase, sell, okay, both movable and immovable property, incur and pay the debts, open a bank account in its own name. If at all the company wants to open a particular account in its own name, it is still possible. Okay. Okay, so open a bank account in its own name and sue and be sued in the same manner as an individual. Remember I told you, if somebody wants to put a case on the company or if the company wants to put a case on somebody, it is still possible. To sue is nothing but to put a case. Okay, so law creates and law only can dissolve the company. A company is created by law, and if at all this particular company has to come to an end, it is possible only by law. Whether it is formation of the company or whether it is dissolution or liquidation of the company, it is possible only through law. A company can come into existence only by law. Same way a company can dissolve or come to an end only through law. Okay, so its existence is altogether independent of the life of its members. Company is nowhere connected to the members. Okay, it is treated as a separate legal entity. Okay, so company is treated as a separate legal entity. There might be changes in the ownership or there might be changes in the management, but company will be there in existence throughout. Now, just because all the shareholders died, it doesn't mean that the company existence will come to an end. No. Okay, so there might be changes in the ownership. Okay, one person might transfer his shares to somebody else. Anything may happen. Okay, so there might be changes in the management also. Board of directors may also change. But company, will it stop its operation? No, right? Its existence will continue throughout. Okay, so it's not that the existence of company will come to an end because of the death of the shareholders or change in the management. No. Okay, so you guys would have heard this particular term, right? Members may come or members may go, but company will stay forever. Clear? So what they are trying to convey over here is there might be changes in the ownership, that is the shareholders might change or even the board of directors might change, but company will continue doing its operation throughout. The existence of company is not dependent upon the member, nor is it dependent upon the board of directors. Clear? Okay, so transferability of the shares has given perpetual succession of the company. What is transferability of the shares? Remember I told you, except in case of private limited company, the shareholders can transfer the shares to somebody else. Okay, so when these people are transferring, along with transferring the shares, they are also transferring the ownership. Clear? Even the ownership is getting transferred from one person to another. Hope you guys understood this. Okay, so let's have a look at this. A company is a legal entity quite distinct and separate from the person who are its members, also known as the shareholders. Okay, so company is nowhere connected to the members or shareholders. A shareholder is not the agent of the company. He cannot incur any debts so as to bind the company. Moreover, the ownership is divorced from management because a joint stock company is managed by board of directors. Okay, so look at this. A company is managed by whom? Remember, I told you when I was talking about the difference between proprietorship, partnership and company. What did I mention? Proprietorship, proprietor being the owner, he'll be taking active part in the management of affairs. Partnership, partners being the owner, they'll be taking active part in the management of affairs. But when it comes to company, although shareholders are the owners of the company, they won't be taking active part in the management of affairs. Okay, so management is taken care by a separate body called as board of directors. Now there should be some reason behind this, right? Why in case of proprietorship and partnership the owners actively are taking part in the management, but when it comes to company, okay, the shareholders are not allowed to take active part in the management? What should be the reason behind this? There should be some reason, right? So what should be the reason behind this? Yes, in order to become a shareholder, all that I need is money. Okay, I've got the money, I purchase so and so companies, so and so number of share, I become the shareholder. I need not have any knowledge or skill with respect to running the business or running a particular company. In order to become a shareholder, if I just have the money, that would be more than sufficient. I need not have any skill or knowledge. Okay, so that's the reason shareholders are not allowed to take active part in the management of affairs. Okay, now let's say I've got just the money, I become the shareholders and I've been asked to take care of the business. Okay, I don't have any knowledge or skill pertaining to running a company. Okay, so do you think it will be helpful for the growth of the company? No, right? So this is reason number one. What is second reason? In order to become a shareholder, it is not mandatory that you should be situated in the same place wherein the company is situated. Not required, right? I can invest in Reliance Limited, which is situated somewhere else. Okay, I can invest in any company share which is situated outside Karnataka or any part of the country. Okay, I need not be situated in the same locality in order to become a shareholder. If I've got the money, I purchase the share, I become the shareholder. Now just imagine when these shareholders are scattered throughout, okay, various places of the country, how will they be able to manage a particular company? So company would be situated in a particular place, shareholders are scattered throughout. Okay, so it would be very difficult in order to manage the affairs of the company. So that is why management of affairs of the company, okay, is being given to the shareholders. So management is taken care by the board of directors. Okay, so these board of directors will be appointed by the shareholders only. Is this clear? Hope you all understood this. Any doubt, any confusion so far? Clear? So let's talk about the features of the company. Look at this. Following are the characteristics of the company. Majority of the features we would have already covered. Let's look into it. So it is distinct legal entity. Okay, so separate legal entity or distinct legal entity are one and the same. In a company, liability of members is limited. Okay, liability of members is limited. Okay, to the extent of the unpaid value of the shares which is held by them. Okay, I'll be explaining you this particular term. Don't worry. It has perpetual succession. The shares of the company are freely transferable except in case of private limited company. A company being a legal person, okay, has the capacity of owning, okay, so owing, enjoying and disposing of the property. A company being a separate body can sue and be sued in its own name. Okay, so majority we would have already covered. Though a company is an artificial person, yet it acts through human beings, okay, so who are called as board of directors. Okay, the management of company is taken care by board of directors. It is voluntary association of person, usually for profits. Okay, so let me just write the meaning of this particular term company. Okay, so let's just prepare the notes. After that we'll be talking about these stuff. Okay, so first we learned about the meaning of the term company. Okay, so company refers to an artificial person created by law, having separate legal entity, perpetual succession and common seal. This would be the meaning of the term company. What is a company? A company is an artificial person which is created by law. A company can come into existence only if it is registered or incorporated under a particular law. Okay, having separate legal entity. So once it is incorporated, it will be having its own identity in the eyes of law. If at all the company wants to purchase the asset, It is possible. If at all the company wants to open a bank account in its own name, possible. If at all the company wants to put a case on somebody, even that is possible. Okay, so all these stuff are taken care by this particular company. Once it is incorporated, it will be having its own identity in the eyes of law. That is why it is called as separate legal entity. What is this perpetual succession? Just now we discussed, right? So existence of company is nowhere connected with the members, okay, or the board of directors. Okay, it will be having perpetual existence or perpetual succession. What is it? There is no end for the company. Basically, there might be certain changes in the ownership or there might be certain changes in the management, but company will continue doing its operation for an indefinite period of time. Just because all the shareholders died or just because the board of directors left the company doesn't mean that the company's existence is coming to an end. Company's existence can come into end only through law. Clear? Whether it is formation of the company or whether it is like dissolution or liquidation of the company, both are possible only through law. Okay, so perpetual succession is as good as continuous existence. Okay, there might be changes in the ownership or management, but company will continue its operation for an indefinite period of time. Okay, so lastly, and common seal. Okay, so what is the relevance of this common seal? See, in order to call a particular document as authentic one or genuine one, if I'm human being, I'll be putting my signature. Okay, my signature will authenticate that particular document. But what about company? So company, in order to authenticate a particular document, it will be using its common seal. Okay, on a particular document, it is just as good as signature of the company. Clear? So company cannot directly sign on its own, right? So therefore, a separate person will be appointed in order to use this particular common seal. So he'll be examining the documents in detail before using this particular common seal. He'll be maintaining a separate register, okay, with respect to those documents. He'll be maintaining a list. What and all are the documents on which this particular common seal has been used? On what date this particular common seal was used? A separate register will be maintained. Okay, a separate person will be in charge of using this particular common seal and he'll also be maintaining a register. Is this clear? Then when it comes to definition, section 2 clause 20, okay, so defines the term company as a company formed under this act or any other existing company. Simple definition. So what is a company? A company is nothing but a company which is formed or incorporated under this law, that is Companies Act 2013 or any other existing law. Okay, so after this, let's talk about the features of company. Okay, so let's look into the various features of the companies. Okay, so when it comes to features of the company, look at the first feature. It is distinct legal entity. You can either call it as distinct legal entity or separate legal entity. This would be the first feature. What is separate legal entity? So once this particular company is incorporated, it will be having its own identity in the eyes of law. Okay, so if at all the company wants to purchase any asset, it is possible. The company can purchase any asset in its own name. It can open a bank account also. If at all the company wants to put a case on somebody or if somebody else wants to put a case on this company, everything is possible. Why? Because it is having separate legal entity. So once it is incorporated, it will be having its own identity in the eyes of law. This is the first feature. The second feature is the liability of the members is limited. Okay, so the second feature is limited liability. Very important thing. Let me explain this particular point. So when it comes to liability of the members, it is limited. Okay, so what will happen? We have got three different types of business entities, right? So we have got proprietorship, we have got partnership, and then we have got joint stock company. Okay, so this is nothing but company. Now here, if you see, the liability is unlimited. Okay, so unlimited liability. So what I mean by unlimited liability is, if at all the assets of the business entity is not sufficient enough, at that point of time the proprietor have to sell their personal asset in order to repay the debts of the business entity. Same way, if the assets of the partnership entity is not sufficient enough, the partner's personal asset has to be sold in order to clear the liability of the business entity. Okay, so what will happen is, now let us say the proprietorship has got asset of 10 lakh, but their liabilities, if you see, it is to the extent of 15 lakh. So there is a deficit of 5 lakh rupees. To the extent of this 5 lakh, the proprietor will have to sell his personal asset. That is, he'll have to sell his vehicle, house, anything for that matter. Okay, so in order to clear this particular debt of the business entity. Okay, so the personal assets have to be sold if at all the business assets are not sufficient enough in order to clear the liability of the business entity. Okay, so same is applicable even in case of partnership. Even in case of partnership, the liability of the partners is unlimited. Okay, so what I mean by unlimited liability is, if the partnership firm does not have sufficient asset in order to repay its liabilities, at that point of time the partners will have to sell their personal asset, okay, in order to clear the debt of the partnership firm. Is this clear? I hope you guys understood this. Okay, but when it comes to joint stock company, that is not the case. Here if you see, the liability is limited. Okay, so limited liability. So what I mean by limited liability is, the liability of members will be limited only to the extent of unpaid value of the shares which is held by them. Okay, so suppose if I am a shareholder in ABC Limited. Okay, so let's say I have purchased 1000 shares of rupees 10 each. Out of this 10 rupees, let's say 8 paid up. I've already paid 8 rupees. So my liability will be limited only to the extent of unpaid value of the shares which is held by me. So I'm holding 1000 shares. Out of 1000, 8 rupees I have paid, 2 rupees I haven't paid. Okay, my liability will be limited only to the extent of this 2000. I need not sell my personal assets in order to repay the debts of the company. Clear? The liability of the members will be limited only to the extent of unpaid value of the shares which is held by them. Is this clear? Hope this point is clear. Okay, so same thing I'll be writing over here. The liability of the members, or you can call it as shareholders also, both are same, shall be limited to the extent of unpaid value of shares held by them. Okay, for example, Mr. A purchased 1000 shares of ABC Limited of rupees 10 each. He has already paid 8 rupees. So liability of Mr. A shall be limited only to the extent of rupees 2 per share. Okay, so his total liability will be 1000 shares into 2 rupees, that would be 2000 rupees. So 2000 rupees would be his liability. He need not pay even a single rupee or single penny more than this. Okay, so his liability is limited. Clear about limited liability feature? Then the third feature is perpetual succession. Okay, so what is perpetual succession? The existence of this particular company will not depend upon the shareholders nor the directors. Okay, so perpetual succession, the company will continue its operation throughout. There might be changes in the management or ownership, but company will continue doing its operation throughout for an indefinite period of time. Okay, so I'll just write the meaning over here. The company shall continue its operation for an indefinite period of time irrespective of changes in the ownership or the management. Clear? So there might be changes in the ownership or there might be certain changes in the management, but these companies will continue doing their operation for an indefinite period of time. Okay, so this is what is perpetual succession. Clear about this perpetual succession? Separate legal entity is clear, right? So once the company is incorporated, it will be treated as if it is an artificial person in the eyes of law. Okay, so once the company shall be treated as a separate person in the eyes of law after incorporation. So once the company is incorporated or registered, it will be treated as if it has got its own identity in the eyes of law. Okay, so that's the first feature. Second feature, limited liability. The third feature would be perpetual succession. Let's have a look at the fourth feature. The shares of the company are freely transferable. Okay, so transferability of the shares. Okay, so other than this particular private limited company, the shareholders of other type of company can easily transfer the shares. Clear? So other than private limited company, there is no restriction with respect to transferability of the shares. Okay, so except in case of private limited company, the shares can be transferred. Okay, so easy transferability of the shares. If I'm the shareholder of a particular company and if I want to transfer the shares, it is possible. Okay, so there's no restriction with respect to transferability of the shares. Okay, so this is the next feature. The next one, if you see, the company being a separate body can sue and be sued in its own name. Okay, so company being a legal person is capable of owning. Okay, so I'll just write these 2 points. Company can own assets in its own name. Okay, so same way, company can sue or be sued. Now, if at all the company wants to put a case on somebody, it is possible, or if somebody else wants to put a case on the company, even that is possible. So there's no restriction with respect to putting a case. So company is treated as an artificial person in the eyes of law. If I want to sue the company or if I want to file a case against the company, I can straight away do it. There's no restriction. Okay, so company being an artificial person is created as a separate person in the eyes of law. Company can purchase the asset, company can open a bank account. Okay, so if I want to put a case on the company, even that is possible, or if the company wants to put a case or file a case against somebody, even that is possible. Okay, so let's look into the next thing. Yeah, so though the company is an artificial person, okay, it requires some human body in order to operate. Such human body is nothing but board of directors. Okay, so the operations of the company, the management or the operations of the company are taken care by a separate body called as board of directors. Yeah, so board of directors will be managing the affairs of the company. Okay, so these will be the people who will be responsible for management of affairs of the company. Okay, so it is voluntary association of person. Okay, so usually for profit. Okay, this point not relevant. So let's talk about the different types of companies. Okay, I hope these features are clear to you all. Okay, so now let's talk about the different types of company. Okay, so when it comes to different types of company, look at this. The first thing is a company limited by share. Okay, so then the next thing is company limited by guarantee. Then we have got unlimited company. Okay, so let me tell you the meaning of these three terms. What is company limited? So you already know a limited company, right? So those company, okay, wherein the members' liability will be limited, that is what is called as limited company. Now, limited company can be company limited by shares and company limited by guarantee. Okay, so let me tell you what is this company limited by share and what is this company limited by guarantee. Okay, first thing is company limited by shares. In this case, what will happen is the liability of the members. Okay, so the liability of the members shall be limited to the extent of unpaid value of the shares held by them. The same thing what I explained over here when it comes to limited liability. You remember this? The same example I'll just copy paste over here. Okay, because when it comes to company limited by share, the meaning is same. So the liability of the members or shareholders will be limited only to the extent of unpaid value of the shares which is held by him. Okay, so here if he had purchased 1000 shares of ABC Limited of rupees 10 each, and out of 10 rupees if he has already paid 8 rupees, his liability will be to the extent of the remaining 2, okay, which is unpaid. So he need not pay even a single penny more than this. So this is company limited by share. Now what about company limited by guarantee? At the time of incorporation or registration of the company, if the shareholder has given a guarantee, what is guarantee? It is as good as a kind of assurance. If I have provided a guarantee that I'll be contributing so much of amount towards the asset of the company in the event of liquidation or winding up, okay, so my liability will be limited to the extent of that guaranteed value which I have given. Clear? So in case of company limited by guarantee, the liability of members will be limited to the extent of the amount for which they have given the guarantee. Okay, so at the time of incorporation, they would have given a guarantee that tomorrow, if at all the company is going for liquidation, will be contributing so much of amount. Now let's say Mr. A, who is a shareholder, he has given a guarantee that he'll be contributing 2 lakh rupees in the event of liquidation. His liability will be limited only to the extent of that 2 lakh. He need not pay anything more than that. Okay, so let me write the meaning of this particular term. Company limited by guarantee. So here the liability of the members shall be limited to the extent of the guarantee given by them. Okay, so suppose I'll just write an example. Mr. X, who is a shareholder of ABC Limited, has given a guarantee to contribute 2 lakh rupees in the event of liquidation or winding up. Okay, so in the event of liquidation or winding up, Mr. A has given a guarantee, or Mr. X has given a guarantee that he'll be contributing 2 lakh rupees. Okay, so his liability will be limited only to the extent of 2 lakh rupees of guarantee provided by him. So his liability will be limited only to the extent of the guarantee which is provided by him. Okay, so nothing more than that. Hope you guys understood this. So this is company limited by guarantee. What are unlimited company? Unlimited company is a company wherein the liability of members would be unlimited. Okay, so here the shareholders will have to sell. Look at this, an unlimited company where there is no limit on the liability of the shareholders. Clear? Okay. So companies, the other classification. Okay, so we have got private limited company or private company, and we have got public company. Okay, so let's look into the meaning of these terms. So basically when it comes to private company, it is a company wherein there will be certain restriction. Okay, so what will be the restriction? There will be restriction with respect to transferability of the shares. Okay, so there will be limit on the maximum number of members up to 200, and there will be restriction with respect to raising the funds. Okay, so look at this. So 3 restriction over here. It restricts the right to transfer the shares. Okay, so except in case of one person company, limits the number of members to 200. Okay, it limits the number of members to 200, and it prohibits invitation of public to subscribe any securities. Okay, so when it comes to public limited private company, it refers to a company which restricts the transferability of shares, limits the maximum number of shares or maximum number of shareholders to 200, and prohibits acceptance of funds from public. Okay, so these private limited company, they cannot raise the funds from the public, they cannot issue the shares to the public and raise the funds. Okay, 3 restrictions basically. First restriction is with respect to what? It restricts the transferability of the shares. The shareholders of a private limited company cannot transfer their shares. Okay, so restriction number 1. Second thing is, it limits the maximum number of members to 200. Okay, so maximum number of members cannot be beyond 200 when it comes to a private limited company. The third prohibition is with respect to raising of funds from the public. Can a private limited company raise the funds from the public? The answer would be no. A private limited company cannot raise the funds from the public. Okay, so these are the 3 restrictions. What is a public company? So public company refers to a company other than private limited company. Okay, so any company other than private company shall be treated as public company. So basically, when it comes to public company, there won't be any restriction with respect to transferability of the shares. Nor there will be any limit with respect to maximum number of members. Same way, there won't be any prohibition with respect to raising of funds. A public company can transfer the shares. The shareholders in a public company can transfer the shares. So there's no limit on the upper number of members or maximum number of members. Same way, when it comes to public limited company, it can raise the funds from the public. There's no restriction. Look at this. A public company is a company which is not a private limited company and has minimum paid up share capital as may be prescribed. Okay, you need not worry of this. So basically remember this much: when it comes to private limited company, there is restriction with respect to transferability of the shares. There is maximum limit of 200 members, and then thirdly, a private limited company cannot raise the funds from the public. Clear? So then the next type of company is one person company. Okay, this is a new company. Earlier we did not have this particular concept. Even a single person, if he wants to start the business in the form of company, that is possible. Look at this. One person company, which is a company which has only one person as members. Okay, so what is OPC? Normally we'll be calling it as OPC or one person company. One person company is a company wherein there will be a single person who will be the member. Okay, so one person company. We can also call it as OPC. Okay, so it is a company in which there will be only one member. Okay, so a single person doing the business. Okay, look at this, which is a company which has got only one person as the member. So this person himself will be the director. He'll be taking care of the affairs of the business. Okay, so then we have got small company. Okay, so important again. So understand this particular statement carefully. Small company means a company other than public company. First point to remember is small company. Okay, so a public company can never be treated as small company. Okay, so small company means a company other than public company wherein the paid up share capital does not exceed 50 lakh rupees or such higher amount as may be prescribed, which shall not be more than 10 crore rupees. And okay, so look at this, and it means both the conditions should be fulfilled, and turnover of which does not exceed 2 crore rupees or such higher amount as may be prescribed, which shall not be more than 100 crore. Okay, so paid up share capital not exceeding 50 lakh rupees and turnover not exceeding 2 crores. Okay, so I'll just write the meaning of this term. Small company is a company other than public company, okay, having paid up capital of less than 50 lakh. Look at this. Paid up share capital of which does not exceed 50 lakh rupees. Okay, so paid up capital of less than 50 lakh and turnover of less than, okay, look at this, turnover of less than 2 crore rupees. Okay, so such higher amount, okay, it means these limit. Okay, so when it comes to this particular paid up capital, as of now, what is the limit? Okay, just a second. Now look at this. When it comes to paid up capital, as of now, the limit is what? 50 lakh rupees. So if at all the law wants to change this particular limit, it can change. Provided what? Provided such amount should not be exceeding 10 crore rupees. Okay. So tomorrow if the law wants to change this figure, instead of 50 lakh, if they want to make it as 80 lakh, 1 crore, they can do it. Okay, but up to 10 crore rupees, they cannot go beyond 10 crore rupees. Okay, and same way when it comes to turnover limit. Okay, so turnover limit as of now it is 2 crore. If they want to exceed this 2 crore, okay, they can still do it, but up to a maximum of what? Up to a maximum of 100 crores. Okay, you need not remember these figures, but this figure is very important. Okay, so paid up capital as of now the limit is 50 lakh and turnover the limit is 2 crore. And again, both the conditions should be fulfilled. It is and. Okay, let me give you a few example. Okay, so ABC Private Limited, or let's say ABC Limited, having paid up capital of 20 lakhs and turnover of 1.5 crores. What do you think? Is this a small company or not? See, what did I say? Both the conditions should be fulfilled. It means paid up share capital should be less than 50 lakh rupees and turnover should be less than 5 crore rupees. Correct? So what do you think? Is this a small company or not? Paid up capital is 20 lakh rupees, which is less than 50 lakh, and turnover is 1.5, which is less than 2 crore. Okay, is this small company? Is ABC Limited a small company? This is the question. Okay, what would be your answer? Yes, is it a small company or not? The answer would be no. Okay, so ABC Limited is not a small company. See, although it is fulfilling the condition, what is the first statement which I mentioned? Small company is a company other than public company. Okay, so always remember a public company can never be a small company. Okay, so ABC Limited is not a small company. Okay, so as it is public company. Okay, so public company can never be a small company. Okay, so public company can never be a small company. As in the definition, it is clearly mentioned that small company is a company other than public company. So always remember. So when I say ABC Limited, it is public limited company. When I say ABC Private Limited, that would be treated as private limited company. Okay, so let me take another example. Suppose instead of ABC Limited, here I just put it as ABC Private Limited. Clear? So what do you think in this case? Yes, don't you think it is fulfilling both the conditions? As ABC Private Limited is fulfilling both the conditions it shall be treated as small company. Is this clear? So this particular company can be treated as small company. Hope you guys understood this. Clear? So then the next type of company what we have is Section 8 company. Now what is the Section 8 company? This is the company which is not run for the purpose of making profit. These are the companies which are similar to non-profit organization. Look at this. Not for profit company or Section 8 company. Okay, so which is a company that engages itself in promotion of art, science, sports, education, research, social welfare, religion, charity, protection of environment or other such objectives, provided it intends to apply its profits, if any, or other income in promoting their objectives. So their objective is not to make profit. Their objective is to promote this art, science, sports, education, culture and other things. Okay, so not for profit companies, or you can call it as Section 8 companies. So what are these companies? So these are the companies which are not run with an objective of earning profit. Okay, so this is the 7th type of company. So these are the companies which carry on their operations for the purpose of promoting science, arts, culture, education, protection of environment, charity, etc. Okay, so their objective is not to earn any profit, rather their objective is what? Their objective is to promote this art, science, culture, education. Okay, so protection of environment, charity, donation and other things. Okay. Okay, so then we have got listed company. Okay, so finally we have got listed companies. So what are these listed companies? These are nothing but those companies whose shares are listed in the recognized stock exchange. These are the companies whose shares are listed in the recognized stock exchange. Okay, so these company shares will be listed in the recognized stock exchange. For example, Reliance Limited, Infosys Limited, HDFC Bank Limited, all these company shares are listed in the stock exchange. Any person who has got the demat account, he can just purchase these company shares. Okay, so those companies whose shares are listed in the recognized stock exchange, it would be treated as listed companies. Okay. Okay, so let's talk about this. Okay, the pivotal role of accounting when it comes to company form of organization. Why exactly is this accounting important for company? See, any transaction for that matter, will you be able to retain in your mind? If I ask you what exactly was the value of purchase which happened on 10th February 2022, will I be able to tell that information? No, right? So the basic purpose behind this particular accounting is what? To record the transaction in a systematic way. Okay, so that at any point of time, if I'm seeking for some information or if I need some information, I can directly go through it and I can get the information. Hope you guys understood this. Okay, so systematic recording of the transaction, this would be the very purpose of accounting. So same way when it comes to company accounting, if at all I need any information at any point of time, this accounting would be helpful. Did you guys understand this? And what would be the role of directors? The board of directors will have to take up a lot of information or will have to take up a lot of decisions. In order to take these decisions, don't you think some financial basis of some financial data will be relevant? See, if I'm able to make out that I'm making profit or incurring loss, there is some scope of improvement, right? So if I feel that the profit is not sufficient enough, okay, so by looking at this financial data, okay, so where exactly Am I spending more? How can I achieve this higher profitability objective? Okay, how will I be able to achieve this higher profitability objective? In order to analyze all these things, a financial data is what is recorded. Now data will be available to you only if you would have systematically recorded it somewhere. Okay, that is what is the crucial thing about accounting when it comes to companies. So this is how the accounting would be relevant for the companies. Clear? Hope you guys understood this. Okay, so let's have a look at this next thing. Distinguishing feature of accounting in a company form of organization. When it comes to company, what exactly are the different features? The accounting process is highly regulated and guided by regulatory pronouncement. Okay, so when it comes to company accounting, it's not that you can do it as per your well and wish. Okay, so there is some regulatory pronouncement which you need to follow. There is some law which you need to follow whenever you're doing this accounting. Alternative treatments of transaction are either limited or completely avoided. So there won't be a particular situation wherein for the same transaction we have got different modes of accounting. No. Okay, so it would be regulated or it would be limited or completely avoided. It's not that for the same transaction you have got 2 or 3 different alternative ways of accounting. No. In the law, systematically they have given the information that this particular item should be accounted in this particular manner only. Okay, so you will have to just follow it. So for a particular transaction, there won't be different alternatives which will be available. Okay. So the constituents of periodical accounts. Okay, so when it comes to company, okay, so they'll be preparing the financial statement for a specified period. Whether it is income statement, what is this income statement? Income statement is nothing but P&L account. Whether it is P&L account or balance sheet, these statements will be prepared for a definite period of time. Okay, so the next thing is the form and content of periodical financial statement are fixed. Okay, so the form and content are fixed. So the format in which we are supposed to prepare the financial statement of a company would be predefined, okay, or it would be prescribed. So when it comes to company, you already know, okay, it has been prescribed where? It has been prescribed in the schedule number 3. Okay, so the way in which we are supposed to prepare the financial statement of companies is been prescribed in schedule number 3. All the companies will be preparing the financial statement in the same format prescribed by schedule 3. Clear? Okay, the importance of compliance to the prescribed rules and regulation is paramount. Okay, so we need to just follow whatever are the rules and regulation which has been prescribed. So when it comes to company, we will be having different accounting standard what we need to follow. We'll be having prescribed format in which we are supposed to prepare the financial statement. Clear? So let us look into these particular regulatory framework which we need to follow. Okay, so we got Companies Act 2013, Companies Rules 2014, accounting standards. Okay, these are the things what we need to follow. Whenever we are either accounting or preparing the financial statement, we need to abide by all the provisions relating to Companies Act. We need to follow by all the provisions relating to companies rules wherever it is applicable, and the accounting standard. The same thing is what we were talking about. Clear? So when it comes to Companies Act, how exactly are we supposed to maintain the books of accounts? So when I say books of accounts, it can be maintained either in the physical form or electronic form. Okay, so when I say books of accounts, it will also be including the supporting documents. Okay, so systematically the sales invoices have to be kept in a different folder or file. Purchase invoice or purchase bill, I need to be maintaining a separate file for bank statement, separate file for fixed asset purchased. Okay, so fixed asset register is what we'll be calling it. We'll be maintaining a separate fixed asset register. Okay, so all these things have to be maintained in a systematic order. Clear? These are the provision what we need to follow. This is what has been mentioned in the Companies Act and Companies Rules. Okay, so when it comes to accounting standard, for different items of the financial statement, we'll be having separate accounting standard. Okay, so whatever has been prescribed in the accounting standard, we just need to follow it. Okay, just remember all these stuff not much important. Then we have got books of accounts of a particular company. Okay, so what are these books of accounts? Remember I told you when I say books of accounts, it is nothing but the way in which we are maintaining it. Okay, so it can either be in a physical form or electronic form. Now any transaction for that matter, whenever it takes place, don't you think I'll have to record it somewhere? Correct? So whether it is recording, okay, so whether it is summarizing, whether it is analyzing, all these things, okay, classification, everything will be a component of your books of accounts. So when I say books of accounts, it is not only recording the transaction but also systematically maintaining the supporting documents. Look at this. Okay, so the Companies Act 2013 requires every company to maintain proper books of accounts and relevant books and papers. So books of accounts is nothing but the accounting process what I do, whether it is in the physical form or whether it is through electronic mode using some accounting software. Okay, there are different accounting softwares like Tally, SAP, a lot of accounting softwares through which I'll be recording the transaction. Okay, that is books of account. Now what are these books and papers? These are nothing but the supporting documents. Okay, even these things have to be maintained in a systematic way. Look at this. Books and paper and book or paper include books of accounts, deed, vouchers. Okay, so any writings, documents, minutes, registers maintained on papers or electronic form, everything will be treated as books and papers or books or papers. Okay, whether it is a deed, whether it is a voucher, whether it is writing, okay, anything for that matter, okay, any document for that matter, everything would be considered as books or paper. Okay. Okay, so books of accounts includes the records maintained in respect of what? In respect of all the money received and expended. The money whatever I receive and the money whatever I spend, okay, will be recorded over here. All the transaction relating to sales and purchase, whether it is relating to goods or services. What is the first thing? I'll have to record the transaction relating to the money what I received and the money what I spent. Okay, second thing would be with respect to sales and purchases, whether it is sale of goods or rendering of services. Same way whether it is purchase of goods or procurement of services. Okay, assets and liabilities. See, when I say these two items, okay, so when I say these two items, don't you think these are my expenses and income? Sales, purchases, the money what I spent, the money what I received, don't you think these are expense and income? So the statement what I'll be preparing mainly for this would be my P&L account. And look at this assets and liabilities. Okay, so don't you think for this I'll be preparing something called as balance sheet? So my books of accounts is nothing but maintaining these stuff, P&L account and balance sheet. Okay. And then the last thing is the items of cost as may be prescribed under section 148. Okay, how much money am I spending towards material, how much money am I spending towards wages, how much amount am I spending towards overhead, all these things will be available. Look at this. Accordingly, the company should be maintaining these books. Okay, so the money which I receive and spend, that is nothing but the cash book and ledgers. Okay, so day book, that is purchase day book, sales day book, other things. Okay, so day book or registers, asset register, okay, schedules and ledger. Okay, so cost books wherever it is necessary. So these are the books what I need to maintain. I need to maintain the receipts and payment account, that is nothing but the cash book. Okay, so I need to be maintaining separate individual ledger. I need to be maintaining the day book. Okay, so whether it is purchase, day book is nothing but the journal book. Okay, register like purchase register, sales register, purchase return register, sales return registers. Okay, I should also be maintaining something called as asset register and the cost book. Okay, anything relating to costing, it would be maintained in a separate book called as cost book. Okay, not relevant or much important from examination perspective. Look at this next thing. So statutory books, what are the books which I need to be maintained? Okay, or which has to be maintained. So whenever they say statutory book, these are nothing but the books which are maintained or which are mentioned by the law. Statute is nothing but law or an act. The law itself is asking us to maintain all these registers. Okay, so look at this particular list. You need not remember this particular list anyway. Okay, so I've just given you the list. Look at this. The register relating to my investment, registers relating to charges. What is charges? If somebody has put a case or if you have put a case on somebody, that is what is called as register of charges. Register of members, that is shareholders, register of debenture holders, annual return, minutes book. What is this minutes book? Anything happening in the minutes, okay, will be recorded in a separate book. Okay, so in this meeting, this point was discussed. So many people voted for it, so many people voted against it. Okay, so that is what is called as minutes book. Okay. Register of contracts, okay, register of directors, register of shareholders of the directors, register of loans and loans to the companies, okay, and to the management, register of investment. If you remember few registers, more than sufficient. Okay, easy to remember. Look at this. The register of investment, the register of charges, the register of members, the register of debenture holders, okay, the register of any loan which has been provided, any loan which has been received, okay, register of contract, okay, so register of the directors, who and all are the directors of the company, okay, all these register will have to be maintained. Okay, so let's look into this last point for the day, that is annual return. So what is this annual return? It is nothing but the return or the reports which is prepared annually at the end of each and every year. Look at this. Every company shall prepare a return hereafter referred to as annual return in the prescribed form containing the particulars as they stood on the close of the financial year. When do we prepare this annual return? So these are the returns or reports which are prepared at the end of each and every financial year. Okay, so these report will be prepared at the end of each and every financial year. Okay, so these have to be submitted to the ROC, that is Registrar of Companies. Now what would be the content of this? Look at this, the content of annual return. So its registered office, principal business activities, particulars of its holding subsidiary and associate company. So first point, it will be giving information about the company. So what is the name of the company? Where exactly is it registered address? Okay, has it got any subsidiary company, associate company? Details of such companies. Okay, its shares, debentures and other securities. Okay, so how much is the total share capital of the company? What exactly is the shareholding pattern? How much is the number of debentures, etc. Okay, all these information will be available in this annual return. Its members and debenture holders along with changes there, okay, since the close of previous financial year. Okay, so who exactly are the members? Okay, how many shares are held by these particular members? Is there any changes which happened during this particular year? Remember statement of changes in equity, what did I mention? If a particular shareholder is selling his share, there will be certain changes which is happening in the capital structure. Such changes will be mentioned in this annual return. Okay. The next thing is its promoters, directors, key managerial personnel along with changes therein. Okay, since the close of the previous financial year. Details of the company I already mentioned when it comes to first point. Details of company like name of the company, the registered place of business, has it got any additional place, has it got any subsidiary, associate company, all these things were mentioned in the first point. Second point I mentioned about the number of shares, debentures and shareholding pattern. When it comes to the third point, I just provided the details about the shareholders and the debenture holders, any changes which is happening therein. When it comes to fourth point, I'll be providing details about the promoters and directors. Who and all are the promoters? Who and all are the directors? How many shares are held by them? Is there any changes which happened during that particular financial year? Okay, is it that a new director was appointed? Is there any situation wherein the existing director vacated from the business? All these details will be provided in this particular annual return. Okay, the meetings of the members, okay, or class thereof. Okay, so meeting relating to boards, meeting relating to annual general meeting, on what date these meetings were held. Okay, all these information will be available in this annual return. Clear? The remuneration what we pay to the directors and key managerial personnel. Okay, how much amount do we pay as remuneration to the directors and key managerial personnel? The penalty and punishment which is imposed on the company, its directors during that particular financial year. Did the company pay any penalty, okay, or did the directors pay any penalty during that particular financial year for the contravention of any of the provisions of the law? Everything has to be mentioned in this annual returns. The matter relating to certification and compliance disclosures therein, the details as may be prescribed in respect of shares held by or on behalf of the foreign institutional investors. Okay, FII is what we normally call any shares which is held by foreign investors or foreign institutional investors. Okay, those details have to be provided. Such other matters as may be prescribed. Okay, so this is what we need to mention. Very easy to remember, guys. When it comes to annual return, what are these annual return? These are nothing but the return or report which is prepared at the end of each financial year. Okay, so what information do we show when it comes to annual financial or annual reports or annual returns? First point, the details of the company. Okay, name of company. Okay, so what exactly is the address of the company? Okay, has the company got any other associate or subsidiary company? Okay, so different places of this particular company. Okay, all these details when it comes to the first point. When it comes to the second point, the details relating to shares and debentures and shareholding pattern. How much is the total number of shares? How much is the total number of debentures and everything? Third point, details relating to the shareholders, debenture holders. Was there any changes in the shareholders? Okay. Fourth point, details relating to promoters and directors. Was there any changes with respect to promoters and directors? A new director being appointed, an existing director leaving the organization, all these stuff has to be mentioned. The details relating to the remuneration paid to the directors and key managerial personnel. Okay. All these points has to be mentioned. So during the year, did the company or the directors paid any penalty, okay, for contravention of any law or regulation? All these stuff has to be mentioned. Is this clear? Hope you guys understood this. Okay, all these are the points. Okay, or any shares which is held by the foreign institutional investors. All these points will be available in this annual return. Clear? So provided that one-person company and small company, the annual return shall be signed by the company secretary, or where there is no company secretary, by the director himself. Okay, so these annual reports, okay, has to be signed by the director and the company secretary, or if there is no company secretary, by the company secretary in practice. Clear? So if the company does not have their own company secretary, some other external person who is in practice, it has to be signed and uploaded or submitted to ROC. Okay. Section 92 subsection 4 further specifies that every company shall file with the registrar. Remember this point, what did I mention? This annual return has to be filed with the registrar, or a copy of the annual return within how many days? Within 60 days from the date on which the annual general meeting has been held. Okay, so when the annual general meeting is not held, within 60 days from the date on which the annual general meeting was supposed to be held. Okay, so these particular annual return has to be submitted with the ROC. Once it is signed from the company secretary, it has to be submitted or uploaded with the ROC within 60 days from the date of annual general meeting. Okay, or if this annual general meeting is not held, within 60 days from the date on which these annual general meeting was supposed to be held. Is this point clear? I hope you guys understood this. So we'll stop over here. In today's class, what did we discuss? We discussed the meaning of the term company. So we discussed the definition of the term company. We discussed about the various features of company. Okay, like separate legal entity, perpetual succession. Okay, so all these features, if you guys remember, look at this. Separate legal entity, limited liability, perpetual succession, transferability of the shares. Okay, so company, okay, it can own the asset in its own name. So company can sue or be sued. Okay, so management will be taken care by board of directors. All these points are clear, right? So after this, we discussed about different types of company, like company limited by share, company limited by guarantee, unlimited company, private limited company. Remember private limited company? 3 restrictions. Restriction with respect to, okay, so transferability of the shares, limits the maximum number of shareholders or members to 200, and then prohibition with respect to raising the funds from the public. Okay, so this was private limited. Then we discussed about public limited company. So then we discussed about small company. Okay, so small company, can a public company be treated as small company? No. So small company is a company other than public company having paid up capital of less than 50 lakh or turnover of less than 2 crores. Okay, both the conditions should be fulfilled. Clear? So then we discussed about 1% company, section 8 company and listed company. After this, we discussed about a small concept relating to books of accounts, books and papers. Okay, and then when it comes to regulatory body, so what and all are the regulatory body? We have got Companies Act, Companies Rules and Accounting Standards. Okay, and again finally we discussed about annual return. What are these annual return? These are nothing but the return or report which are prepared and submitted to the ROC at the end of each financial year. Okay, it will be containing what and all information? Information relating to the company, like name of the company, the principal place of the business, has it got any subsidiary or associate companies, the details relating to number of shares and debentures, was there any changes in the shareholding pattern? Okay, details relating to the shareholders, debenture holders, details relating to promoters and directors, or any changes with respect to these promoters or directors during the financial year. Okay, the amount of remuneration whatever we pay to the directors and key managerial personnel, the number of meetings held, whether it is annual general meeting, whether it is board meetings, every details will be available in this particular annual return. Clear? So if at all there is any amount which the company or the directors paid as penalty for contravention of any provision, those details also will be mentioned. The number of shares which is held by the foreign institutional investors, all these details will be available. Clear? And you know that these annual return has to be signed by the company secretary. Okay, and within 60 days from the date of annual general meeting, these annual return has to be submitted to the ROC. Any doubt, any confusion so far? So we'll stop over here. In the next class, we'll be talking about the most important aspect, that is issue of shares and debentures. So over here, we'll be learning about the journal entry or accounting treatment with respect to issue of shares, forfeiture of shares and reissue of shares. Okay. So as I initially mentioned, make sure that you guys go through whatever things we discussed in today's class. Okay, try to cover up the stuff whatever we discuss in each and every day on that particular day itself. Okay, thank you so much guys. I'll see you guys tomorrow. Thank you.